Everybody, it's another edition of the Honeymoon Traders.
Hi there.
Hi, it's Wednesday, 4/8/2020. We are not traders.
This video is for entertainment purposes only, and please don't consider us experts on the subject. Trade at your own risk.
Very good. Okay, babe. Today was an interesting day.
He says that every day. He means it, but he says it every day.
Well, okay. They're all interesting days to me, but yes, I am biased because I like to trade. Anyway, Tuesday was also an interesting day where we had quite a bit of high at one point of 274.
We're looking just at the SPY 500 ETF trust.
Yes, and by the end of the day, it had traded quite down to the 264 level. Well, and it went pretty much. I mean, there was a couple trades there, but it pretty much, you had one direction all day long practically. Just for a little bit, it was different, but the trend was all day long that way, downward. And today was quite the opposite. The trend was up. It was up biased, trending up all day long. And basically we followed this trend line. I mean, I followed this trend line. This trend line from way back when, I don't know when, but
you have to know when. When does it? Right, you can't say way back when and just poo-poo it away if people are curious.
All right,
how you formed that trend line.
All right, it was from Sunday. Sunday's low.
All right, Sunday is now the definition of way back when for day traders. Sunday is way.
So it was Sunday's low, and it traded up from Sunday, even through Monday and through Tuesday. Even though we had a down day, it was still trading up. And
I think that's the important thing to notice. Even though we had a down day, it was still trading up.
Yeah, if I work this trend line, if we were back here in time, on Monday, we would have been doing this, and then on Tuesday, we would have done this, and notice it broke trend line. On Wednesday, today, we would have done it to the morning low, right there. The morning low right there, and so we just keep swinging our trend line out. It's failed on a daily basis, but on long term, it has followed through. And today it followed through especially. And basically, if we go to the 1 day, 1 minute here.
1 day, 1 minute.
Yes. And I made several trend lines today. And today, the longer trend line was right here. And I use that as the resistance, as the support level. I'm sorry, the support level of where to enter a trade, even though it didn't look it at the time. Okay, this was the support level because that trend line from this morning at 7:45 on the overnight session, that was the low of the overnight. And so that was pretty much the target area of where to put in a good trade. So the first 15 minutes, first half hour, first 15 minutes really didn't show anything. Next 15 minutes showed that we touched the trend line. It was off to the races after that.
Did you make those notes? First trade, all or nothing?
Yes.
How cute.
Yeah, you like that?
I do. I love it.
And pretty much you could see right here. This is your first trade of the day. Now, this was one of those days where, like I was telling you earlier, you could have bought 4 of the same option. Sold the first leg here, sold your second leg here, and sold your third and fourth leg here.
All right, so you're saying quadruple down.
Right.
But your strategy for quadruple down is you can sell one at a time as you make money. And if the last one seems like it's not in the money, just get out and your previous 3 sales should cover any
Should
losses
cover any
incurred
losses,
from your
exactly.
overambitious held on,
Over
longer.
ambitious is right. Yes, all or nothing is right. Is the bet of the day. So, anyway, so at between 10 o'clock and 12:15, you could have bought 4 options. Okay, let's look at our trades here. 4 options. I picked
On the call up.
on the call up 268. I picked 268 because why did I pick 268? Basically, I just figured it was gonna. I don't know why I picked the 268 call, but I figured we're not going no. It would be
I can see it. I mean,
we're not going lower than 266. The reason why I picked the 268 at this time is because it was cheaper than the 266.
okay.
Okay, I mean, I was willing to. I hate putting all my money into one option at like $200 or something like that.
Sure.
So at this point, the 268 was cheaper then.
Right. At the end of the day, buy low, sell high is still the mantra, and the cheaper options, and we're using options because we're calling up. We see this SPY, ETF fund 500 ETF going up, so we want to look at the options for calling up, and
Right.
Price matters.
Price matters, right? Especially when you're playing with you're playing with the small amount of money. Your kitty is small.
So what was the
you play small.
268 that you bought? How
So
much was that?
So the call op 268 call option I picked, and at
And
10:15,
we're looking at the 268 call option screen right now. So
right. This
even
is
though
it looks exactly as the same as the SPY chart.
Okay.
But now we're looking at the option chart. The option for the 268 call expires today.
All right.
You could have got in at $1.21.
Now, where did you pay your 268 trade call? Where
I
did you
paid
get in?
$1.25. I paid
right.
somewhere.
All right, $125. You bought 100 shares. That's one option.
I bought one option, right? I wish you'd stop saying 100 shares. It's just one out. We're working with options.
I think people need to realize that, and anybody who knows that isn't watching us. So I think it's relevant to keep saying that.
All right. So here I'm saying you could have bought 4 options at $1.21. All right? And then and your first trade right here. Now I didn't know. Like I said, I didn't know whether it would keep going down or if it kept going up, but it touched that trend line at this point in time at 10 o'clock, 10:15.
Right. So
it
don't
touched
say
the bottom
the
trend
buck
line.
21 then, because at the buck 21 level, you were just trying to see what was happening. I mean, that's really hard to make a bet right on the opening of the market.
Well, I took a chance, like go back to the SPY. I took a chance saying, that trend line, it touched that trend line.
It did, but it touched that trend line.
And so my stop was below the trend line,
okay,
at least 266 or something, 260 something. But my stop was down here. All right, because and I was assuming, everything's an assumption, is that it was going to go up. Now right here, it did. The positive and negative did diverge, and the trend line followed through above the 20, and it kept following through above the 20, till the end of the trade. Till it kept going down.
So go back to the call 268. When did you get out?
So I got out. Right here at 11:45.
And it was at 271.
No, actually, I got out before that. I got out right here. I'm sorry. I got out right about here where it was. I'll tell you what. Here, I know what price I got out of. I'm not sure. But the trend line started going down, so that's why I had sold it.
Yeah, and that's rightly so, that you should respond to a trend line going down with appropriate caution based on your own personal analysis of risk. Everybody has to know individually, as a trader, a day trader especially, what are you willing to risk?
All right, yeah. So,
and I don't like you risking too much.
Right. So pretty much I got it when it started trending along this this first trend line that I created, it started coming down to that level. I sold out. I bought it at $1.25. I sold it at 2.30.
Mm-hmm.
As you can see from this chart, I sold way too early because I figured it might go up to the 272 level or the $3 or $4 level, but who knows?
Yes.
That's why I'm saying you could have bought several
Yeah.
options and
Yeah.
then kept how can I say
Keep liquidating as you feel comfortable holding, but don't hold on to everything.
yeah, just God, there's a word I'm looking for. Anyway,
Scale up.
scale down. You
Scale
scale
down.
down, right? You got 4 options. You
You're
sell one.
welcome.
You're welcome. Yes, thank you. I'm sorry.
Mm.
Anyway, all right. The second trade came along, so it traded sideways after it hit that level, the 424 level.
Mm-hmm.
I think it was the 272 or something like
Mm-hmm.
that. It traded sideways from 11:30 all the way up until 1:30.
All right, and you can see that down in the buyers and sellers. It's just a gnarled mess.
Right. It consolidated pretty
Mm-hmm.
good for a good 2 hours. At that point, you had a really short time period of it going back down to the trend line. Here, you could have tested again the trend line and bought another call.
Mm-hmm.
I would have just bought another 268 at this point. I didn't
Mm-hmm.
do any trades here, but I could have bought another 268 trade here, and you could have rode that 268 from what, $3 all the way up to 6.45,
How
$6.45. That was your second trade.
Okay.
All right, and
And that was a short.
that was short. It was from
So you
2
should go
o'clock.
back and show that on the SPY, because in case people get confused, that's a short. That is not a call.
No. It was a call, Amanda. We bought here. We sold here. This is the option.
Okay, that's
This
a
is the
call.
option.
Okay,
Yes, it's
that
a
is a
call.
call.
You
Okay.
could have bought the option at $3.
All right, so you're buying it at the 2 o'clock divergence, not the 1:30. I
The
see.
2 o'clock,
Okay,
yes, and
the
then
2 o'clock.
you could have sold it at 3 o'clock.
I'm
You
sorry,
could have
you're
sold
right.
it.
That is a call. Okay, we are on the call for 268.
Right. Once again, we used the 268 again.
Mm-hmm. So let's
So
look
at
at
2
2 o'clock.
o'clock,
Yeah.
so at 2 o'clock, right here, it hit that trend line, right on the money, and it bounced right off.
Mm-hmm.
Right, and I had that trend line coming all the way back from down here, from
Sure.
where I showed you earlier,
Right.
and it hit that trend line to the number, man, right there. And you could have took another trade right here. The divergence happened. It had already started going down. The divergence happened. The trend line stayed intact, but your negative and positive crossed over.
So let me ask you, there's no penalties for selling and rebuying in, right? I mean, there's no advantage to holding on to a trade. If you had bought that let's say the 267 back at
Mm-hmm.
10:15
Mm-hmm.
and holding on to that to the end of the day, that wouldn't make you more money than two separate trades, would it?
No.
No, because there's an expiration, and that time decay actually begins working against you. So
It
holding
does.
it till the end of the day is a far worse strategy than just taking your money on the first trade, waiting, buying in again, and taking your money on another trade.
You know what? I wish I was that good. I think a lot of people wish they can always buy low and sell high, always sell high and buy. It's not.
But
It took
what
me
what
years
I
to
want to say here is that time decay is working against you, and that it
the
should be really
right
well
time
understood.
decay is working against me, especially if you bought this call and then it started coming back down.
Yeah.
The time and the downward trend would have left you back at your starting point.
Yep. And you would have felt awful. You would have felt awful.
However, at 2 o'clock, it only went down to the trend line. You were still in the money, and your second trade would have came in, and you would have sold at the 3 o'clock level right here.
Mm-hmm.
So your second trade is basically from 2 o'clock to 3 o'clock.
Two trades are better than one. Don't think that you are going to hold out for a long day trade.
Sure,
All right.
that's what I'm saying. You could have bought four of these options at $500 something, and then sold one here, then sold another one here, and then sold your last two up here. So anyway, so that's your second trade. Your third trade happened at the end of the